Let me be very clear. If someone pitched you equipment leasing as your way to wipe out your W-2 income taxes, you need to slow down before you sign anything, because what they're not telling you could cost you a lot more in taxes. Hi, I'm Mia Taylor, enrolled agent and tax advisor, and I review these deals for high income earners all the time. And I'm going to show you exactly how I evaluate them before any client moves forward. This is where the truth separates strategy from sales. So the first thing you need to look at is material participation. The first question I ask is, how are you qualifying this as non-passive? Because if this is passive, and most of these deals are, you don't get to offset any of your W-2 income, okay? So if the entire pitch is huge tax write-off, but you don't materially participate, that's your first red flag. The second thing we want to look at is the debt structure, okay? How is this actually financed? Is this recourse debt, meaning you're personally on the hook, or is this non-recourse, okay? Because a lot of these deals are highly leveraged. You're not just investing, you're guaranteeing the deal. Third is the exit strategy. I tend to ask, who's buying this equipment back? What's the exit plan? Because if the entire model depends on we'll handle everything for you and that there's no clear liquidation path, that's not a strategy, guys. That's a gamble, okay? The fourth that I like to look at on these deals is cash flow versus tax play. And this is the biggest one, because these deals, in order for this to make sense, okay, you need to know if this makes sense without a tax write-off. If the answer is no, you're not investing. All you're doing is buying a tax deduction. And that's exactly what the IRS looks for. 5, promoter incentives. Finally, I ask, how is this promoter getting paid? Are they making money on marking up the equipment, financing the deal, charging fees on the back end? What does that look like? Because if they get paid regardless of how this deal performs, right? You need to understand who this deal is really designed for. Look, equipment leasing can be a legitimate strategy, but only when it's structured correctly, not when it's sold as a shortcut to eliminate taxes. If you're considering one of these deals, have it reviewed before you move forward. This is something that your tax advisor and strategist does for you. Because the goal isn't just to save taxes, it's to protect your wealth while you do it. Listen, if you like this video, I would like for you to hit like, share, and subscribe. There are other high W-2 income earners out here who are being sold to left and right by these promoters who are selling oil, gas, energy, equipment leasing, and everything else you could think of. And they're not really sure if they're going to be protected. These videos are designed to help you to be able to evaluate a deal. And if you feel like you want to talk with someone, you can feel more than free to book a call with our office, talk with one of our advisors. We will help you figure out what you can do. But you really need to understand that in your particular position, because you're W-2 only, that this is technically your only route in terms of trying to create some tax savings outside of your employer. But you need to be very, very cautious about who is promoting this to you. And that's what your tax advisor is designed to do for you, okay? All right, I look forward to seeing you guys on the other side. Take care.